This is the India Development Debate right here on ET Now. I'm Supriya, Shrinate, and with me is my colleague Sandeep Gurumurthy. Piyush Goyal seems to be in a man in hurry. The stand-in finance minister today held a marathon meeting with the head honchos of state-owned banks in Mumbai as part of the Big Bank cleanup. In his first media address after taking over this portfolio at North Block, Goyal listed out a series of measures to bail out PSU banks from the big NPA mess. First, the government is considering setting up an asset reconstruction company which will take over a bulk of the bad loans. Also, a consortium of banks will take over good loans of the 11 state-owned banks that are facing strictures under the RBI's prompt and corrective action diktat.
But many believe that there is hardly any new prescription in Goyal's cure for the ills that are plaguing the Indian banking system. For one, contrary to market expectations, there was no word on merger of weak banks, neither was any proposal for fresh capital infusion. Goyal was also silent on how banks plan to recover dues worth thousands of crores of rupees from willful defaulters. So are the measures announced today good enough to bail out public sector banks? Is the government running out of options? That's what we're going to debate tonight on this special edition of the India Development Debate, the Big Bank Reboot. That's our topic of discussion tonight on the India Development Debate. We discuss tonight on the India Development Debate the state of PSU banks and the finance minister's first official word on the ICICI Bank crisis. Much to discuss. We've got a wonderful panel joining us on the India Development Debate this evening. Pradeep Chaudhary, former chairman SBI, Hemendra Hazari, banking expert, Professor T.T. Ram Mohan, Professor at IIM Ahmedabad, R. Jagannathan, editorial director, Swaraj Magazine, and Maithili Busturmatta, a very own consulting editor of ET Now. Maithili, I'm going to start off with you. Arvind Subramaniam in his 2017 economic survey made a strong case for a bad bank. You know, he quoted this noted economist Holmes to say, once you have eliminated the impossible, whatever remains, no matter how difficult, must be the solution. Is that the situation right now?
Well, I wouldn't think so, because to the extent that banks have made provisions for almost 90%, I would say, of their stressed assets, and we have the IBC very firmly on the ground. To that extent, I think the case for a bad bank is much less than before. Moreover, remember, a bad bank is merely a transfer from the right hand to the left hand, because a public sector ARC, there again the funds would have to be provided by the government. The same funds have to be provided by way of recapitalization bonds to the public sector banks. So, by setting up an ARC or a bad bank, whatever we want to call it, it's merely a cosmetic solution. You're whitewashing, cleaning up the balance sheets of the public sector banks, but the problems still remain. The stressed assets remain, except that instead of remaining on the balance sheets of the banks, they move to the publicly owned ARC. So, it's really only a cosmetic solution. It doesn't solve any problems, and to the extent that banks are better equipped to recover the assets, they would do a better job of recovering the money, because merely by transferring the assets to an ARC, that's not the end of the problem. It cleans up the balance sheets, apparently cleans up the balance sheets of the banks. The problem of resolution still remains. So, to my mind, it is an idea which is really not worth much consideration at this juncture, particularly since now banks have made the provisions. There is the issue of where do you find the money for the ARC, and you have the IBC, which now seems to be kind of after getting over the initial teething troubles, and hopefully resolution recovery will follow. So, at this particular point of time, I do not think there is a case for a publicly owned ARC at all.
Okay, just hold your thoughts there. Maithili, not in favor of this bad bank, the idea that seems to be back on the table. But Mr. Chaudhary, this isn't the first time this option is being discussed. What has changed for the government to now constitute a committee to consider the same idea all over again, especially when some amount of progress has been made with the IBC?
See, IBC is very different and ARC is a very different thing. Now, I must admit that a similar ARC exists. It is called Asset Reconstruction Corporation of India Limited, in which the shares are held by SBI and IDBI and ICICI. So, this experiment has been partly already done. But the difficulty is, supposing I am advising a few ARCs that a bank has a loan for 100 rupees. The ARC buys it for say 40. Now, and the book on the books of the bank, this is valued at 60. So, the bank will immediately have to make a provision of 20. and then it is to hope that ARC would recover this 40 in next 3 years or next 4 years, and the ARCs don't have a magic wand. They have to go through the same recovery process, so it doesn't help much. And even if you are to try that option, already there are 14 or 15 ARCs in place, so one more ARCs I think just becomes a Me Too kind of a thing. So it may not be a significant breakthrough, but then government thinks that this option has to be explored. Let them have the benefit of doubt, let them have try it out and do that.
Okay. Two experts on the panel believe it's not going to lead to a significant breakthrough. Professor Ramon, what's your own view? Is it a good idea, bad idea? I mean, let's look at the upside. It essentially separates the loan resolution process from concerns of bank capital by pooling in all the debt into one centralized entity. It will, of course, also solve the coordination problem, which many believe is one of the reasons why these cases have not been resolved. So, does that make it compelling enough for it to be reconsidered?
Well, all these arguments were made and discussed at length a couple of years ago when the idea was first mooted, and then the idea was buried because evidently it was considered infeasible or not such a great idea. So it's not clear to me, what has changed in the last couple of years for this idea to be revived. The only thought that comes to my mind is whether the NPAs, which are once they are moved to an ARC, would they somehow become exempt from the IBC regime and the RBI's resolution framework? So now you have a situation where within 180 days, if the loan is not resolved, it is automatically to go to the IBC. Could it be the case that if you move those bad loans to an ARC, then the resolution framework would not apply, and so the ARC would not have to send the loans summarily to the IBC, and there would be potential for negotiation between the ARC and the borrowers. So is that the idea? Is there going to be a separate dispensation for the ARC which is not applicable to the banks? Then that definitely puts a different complexion on this particular plan.
Okay, Hemendra Hazari, the next obvious question will have to be that while this is being looked at, this new approach, it's there's some people who will welcome this, there will some who will say not required. Mr. Goyal perhaps is looking at this as a deft tool to resolve the NPA menace, but we've undergone a certain process. Won't this new fresh approach at this stage delay the resolution process, because it sends out the signal that there is still this one more tool that is left to be tried? And does that send out a signal where decisions will perhaps be delayed once again? Hemendra Hazari.
In my opinion, Mr. Goyal has recently been given this charge of the Finance Ministry. He has to show to the public that he is doing something. Therefore, this announcement of his, in my opinion, is old wine in new bottles. I really don't see anything substantial happening of it. We have had so many ARCs, as Mr. Pradeep Chaudhary has pointed out. None of them have been a great success. Even those which have had limited successes, there are a lot of stories how promoters have gone behind the backs and, done the deals and, got the recovery done. So this whole concept of ARC in the Indian context, and from what I have seen for the last, 5 years that they've been in operation, really the entire resolution process has really not come about. Now, we were hoping that the IBC, would bring about this resolution process, but I think that is also giving mixed results. So, in my opinion, by now throwing in this ARC, and there are already so many ARCs, why this particular ARC should be a success, I really fail to understand how it can be a success, because, as it has been pointed out even earlier, the processes, the systems of recovery, all has to be going through the existing system. There is no new system that is being devised for the recovery process. And in this case, it is just a transfer from government-owned banks to a government-owned entity, and we already have that in the major ARC today.
Okay, Jaggi, come in on that. Old wine in a new bottle. Hemendra Hazari says Piyush Goyal needs to show to the public that he's got some ideas that he's bringing to the table when it comes to resolving the NPA crisis. But given the limited success we've had in loan resolution so far, would a bad bank or, a public sector asset rehabilitation agency like Arvind Subramaniam called it, would it not eliminate the obstacles plaguing loan resolution? I mean, surely there is merit in it being considered once again, you think?
I think the idea of a bad bank, if it had been broached in 2014 and it had been given a very wide ambit to really resolve loans very fast and start converting them to good assets, that would have been very useful. But today, when the government just has another 11 months of tenure left to start an ARC, it makes no sense when there are already 10 or 11 of them. What you need to do is a very simple thing. You don't need a new bad bank. You have 11 bad banks. You have prompt corrective action cases, there are 11 of them. So, all you need to do is convert each of those bad banks purely into a asset recovery bank, transfer their good loans to the better banks, so that the clients and borrowers can start receiving the loans. That is, I think, what Jayakumar is supposed to do. That makes far more sense. So, there are enough bad banks already in the system. All you need to tell them is, you know your borrowers, now go and collect them, make sure that you get the best recovery. The government will give you a sovereign guarantee that deposits stay where you are. Wherever deposits want to migrate to a better bank, let them do so at a marginal cost, whatever it is. So, you do not need to create yet another entity. It will take 6 months to set up, appoint a chairman, appoint a thing. You have 11 bad banks, make sure that they go after asset recovery. That is all you need to do.
Okay, Mr. Chaudhary, if I may come to you, as the 2017 economic survey rightly pointed out, a bad bank will come at a price since loans have been made and losses incurred, now making a bulk of the burden fall on the shoulders of the government. I know you're not a big fan, but I just want to talk from the government affordability point of view, from the point of view of stakeholders. Can we afford a price of that magnitude to be paid right now, even though it may lead to cleanup?
The price that will have to be paid is no different whether you take the ARC route or you allow the loans to remain in the bank. But what I am worried about, that it will create a moral hazard, because the banks will again go and say that, well, let me take on this loan, let me do this exposure. If it works fine, then I will be doing a victory lap, and if it does not, there is always the ARC where I can dump the assets. This we have seen even in the bank, within the bank, we had a stressed asset group and a corporate and a mid-corporate group. So, these people, some of them took very ambitious and adventurous calls, saying that, well, till it performs, I am the beneficiary, not personally, but this group. And the moment it becomes non-performing, I can leave it at the doors of the stressed asset group. So, these kind of things should happen, but even the ARC, see, I am associated with one ARC. Supposing you transfer the loan to an ARC, it is not a static situation. The company does not come to a halt. The company has to be kept running, and in order to keep it running, it would need guarantees, or else, just let me exemplify this. Supposing you take a power asset which has gone into default, and as the formula suggests, you transfer it to an ARC, but then by itself the dues won't be recovered. So, you have to let that power company perform. Now, power company has to go and bid for a PPA. The moment you go and bid for a PPA, the electricity authority said, give me a guarantee. And when they give a guarantee, then the Coal India says that bring a LC. I don't know whether you will take the coal or pay for it or not. So, even in the resolution stage, the company has to be kept going, and it is best done if it remains within the bank. And even in the resolution process, the committee of creditors, the asset reconstruction companies do find a place, but it has not been found to be a superior solution.
It's an important point you're making, and the fact is that since they've brought it back on the table, it's only fair that we debate all aspects of it so that our viewers get an insight into why this makes or does not make sense. Maithili, a bad bank will also need a lot of funding. Where is the money going to come from? Through, the options are either the government issue of securities or through equity share provided to the private sector, or through the RBI. That's another option. Where is this going to be funded?
Oh, absolutely. That's a big question mark, particularly because the fisc is always under stress. The government just doesn't have the funds. So if it had the funds, as Mr. Pratik Chaudhary was saying, why not give the funds to the bank itself? Because if it remains on the bank balance sheet, the bank will have the incentive to try and recover the money. So the same amount of money, whether it is remaining with the banks, given to the banks by way of additional capital, and hence the bad loan remains on the bank's balance sheet, or the bad loans are transferred to a publicly funded para or bad bank, whatever you want to call it, it makes no difference. In fact, it's far better that it remains on the bank balance sheet, because the bank then has the incentive to try and get the money back, and now courtesy the IBC, courtesy a whole host of other measures that have been taken, provisions have been made, the bank would be in a better position. So frankly, the entire issue of where are the funds going to come from, that is completely unanswered. Mr. Piyush Goyal just spoke in terms of generalities. He didn't get into any specifics. The committee is supposedly supposed to address that issue, but it cannot come up with any magic solutions. So frankly, this idea has been discussed in the past, and as Jaggi said, in 2014 it might have made sense. But considering the progress that has been made so far, particularly in terms of provisioning, particularly in terms of the IBC, today there is no case, particularly when the government just doesn't have the money. If it had the money, give it to the banks, recapitalize the banks, that makes more sense.
Okay, if you have the money, give it to the banks. Don't go for experiments, at least not in the last year of your term. That's the word from Maithili. But Hemendra Hazare, let's presume that this is an idea that has been put on the table. This is an idea that could well be followed by the government. There are, and you know, we'll be discussing with that lens now. There are quite a few mid-sized ARCs plus, and there is an SBI run ARC. Does it not make sense to strengthen them at this stage instead of, you know, looking at something new?
True, because government itself has its own ARC through the government agencies, and of course with ICICI all in there. So this whole purpose and the whole objective, I think, is just, you know, to show for public that he's doing something, because you already have so many institutions. You have the public sector banks which need to be recapitalized significantly. A lot of the capital that you pumped in recently is a lot of it has got wiped out with the losses, and there are going to be more such losses coming in. So this whole idea is that you need capital. You pump in capital into existing institutions, or you're acknowledging that none of these institutions are capable of, you know, handling the ARC business, which is ridiculous. Then why do you have so many? So the purpose is, and that's why I think this whole thing is really an eyewash, is just that he has to show that he's doing something. He's been recently given the task, and that's the way it should be seen. This whole idea of discussing whether this ARC is going to come up, whether it will be a success, I think, you know, it's just a waste of time, really.
Okay, let's move forward then. Jaggi, do you get a feeling that the government is sort of run out of ideas on what to do with India's struggling PSU banks? Jaggi?
Yeah, I'm sure they have run out of ideas. I think, yes, I'm sure they've run out of ideas. A few days back, one newspaper reported that you're going to have 4 weak banks being merged into one. I can't think of a more sillier idea. You don't have 4 weak banks, you merge them, you get a weaker bank, not a stronger bank. So I think they really have run out of the ideas. What you now need to do is have clarity that you need to shrink the public sector banking system, which means the 11 PCA banks need to be steadily shrunk and give them a slow transition away from where they are. And you need to take the better assets, put them in the salvageable banks, and let the other ones narrow down, seize down, convert themselves into payment banks, small banks, whatever they need to be, but they need to be shrunk. The government has to finance a VRS for the employees. You have to be clear that public sector banking has to be shrunk. Now, the NPA problem is one thing. You probably have 10 lakh crores of bad loans, out of which 5 lakh is probably provided for. You will probably recover another 2 or 3 lakh crores. That 2 lakh crores you still need to fund. You might have to capitalize banks in a big way again this year and the next. So the rest you have to shrink, and the shrinking is the strategy. That is what you have got to do it in a steady way without loss of public confidence. That is the goal.
Okay, Professor Ramon, I'm going to come to you. Jaggi here believes that merging of 4 loss-making state-owned banks is a daft idea. Do you essentially agree with that, that the merger of these 4 weak banks may just end up in a weak bank itself and not necessarily a strong bank?
Yes, I mean, well, it's not just the merger of these 4 banks. I think the idea of consolidation among various public sector banks, all sorts of permutations and combinations have been thrown up. I think all are equally silly ideas, because you don't really have a strong enough bank now within the public sector framework which can take over some of these weak banks and reinvigorate them. So I think the idea of consolidation is certainly not the idea to be pursued at this time. But I also would be a little skeptical about the idea of shrinking a whole lot of public sector banks, because you have to understand that in the process the economy is going to take serious knocks unless you think that the funding which is being provided by these 11 PCA banks, whatever has been provided so far, can be taken care of by other sources such as NBFCs and financial markets and so on. I have my own doubts on whether the alternative sources can really replace the funding provided by the public sector banks put together, and especially the SME segment, whether they will get the necessary funding. So I think there's serious danger in pursuing this idea of shrinking public sector banks beyond a point, because when you shrink the public sector banks, you take the economy down with you, and there is every danger that even some of the relatively stronger banks, not only among public sector banks but among the private sector banks, will also be adversely affected. So I'm not sure that that is the route to be pursued. There is clearly a requirement now to infuse capital into the system, as many people have pointed out, whether you pursue the ARC route or whether you keep the banks in the current state. And therefore, I think you should go ahead and infuse whatever capital is required, and then give them whatever support is needed to effect recoveries. I think that's a simpler and straightforward route to pursue, whereas all the other fancy ideas that are being explored carry the real danger of further weakening the banking system.
Okay, it's an important point you're making, and we will debate that as well. Does it just make sense to keep recapitalizing these PSU banks? But Mr. Chaudhary, I want you to respond to this PSU consolidation, proposal, because you've been around as well when this proposal was on the table. It's been talked about for years now. We saw comments from the SBI chairman right now, who said that don't merge any weak bank with us, almost saying that there will be a systemic risk that will come in. Do you agree with that? With the opinion of both Professor Rammohan and Jaggi, that this PSU bank merger is a non-starter right now?
No, I think Mr. Rammohan and Mr. Jagannathan are saying very different things. Mr. Jagannathan is for shrinking the PSU banks, whereas Mr. Rammohan thinks that's not a good idea. So I think they're saying two different things. But coming to the merger, I think merger has to be given time. In fact, I was privileged to be a managing director of State Bank of Saurashtra, which got merged into State Bank of India. Now, merging an associate bank with the SBI was relatively easier because the computer systems were same, the cultures were largely same, and even the seniority, the staff benefits and all that were roughly similar. So therefore, but even then, it took 2 years to, what I should say, consummate the merger to get the benefits. Why I am saying this? For example, if you see in Delhi, there is a place called Nehru Place, which is a commercial area. Now, there are 5 associate banks which have recently been merged into SBI: Patiala, Bikaner, Jaipur, Mysore, Travancore and Hyderabad. Now, these commercial branches, their business has moved to SBI, or one of them has become SBI. But what do you do with the rest of the 4 branches? Because their landlords, their lease rentals, their lease deed are valid for another next 6 to 7 years. So even if you don't use those premises, the costs are not going to go away. So therefore, I think the better course would have been to allow the merger to sink in, give about 2 years time for each merger to go on. But anyway, government knows the best. But I think offhand, I can only say that merger, if attempted, has to be between 2 banks which come from similar background with similar cultures. For example, if you merge a Bank of Baroda with Dena Bank, theoretically, I mean, if you leave out the systems issues and all, I think there would be a less of a sense of loss. Similarly, if you merge, PNB of course is in difficulty, Oriental Bank with, Punjab and Sindh Bank, Indian Bank or Indian Overseas Bank, or 2 of the Bangalore based banks, Syndicate, Canara, Vijaya or something, 3 of the Calcutta based bank, 2 of them. I think that should be attempted and thought through. But again, it should not be a hurried decision, and I totally disagree with this shrinking business, because supposing I am a home loan borrower of a weak bank, where do I go? The next bank comes and say, I have shrunk, I have closed my shop, I have sent out my staff on VRS or on transfer. So where do I go? What happens to the small business? What happens to the transport operators? It's easier said than done, and I think this, what is called financial inclusion has been achieved after a great effort and with 100,000 bank branches. Now, if you are going to roll it back, I think it's going back in time, and every bank then would close the remote and village area branches. So what happens to our, thought or our idea of reaching banking to every nook and corner? So I think these are two contradictory positions.
No,
you can't be saying shrinking
point.
and you can't be saying let us have financial inclusion. We have to take our pick.
Okay, okay. And the pick has to be between financial inclusion and shrinking businesses. Michael, want to debate the next round with all of you on this very particular topic, because at the crux of this entire debate is, and I know you've had this position for long, that should you be in, all kinds of social services and all of that, because that includes financial inclusion. But the reality is, shrinking of businesses may entail turning the clock back, taking banking to everyone, is not what shrinking of business will do, even though fiscally speaking, strictly maybe, it may be a fiscally prudent idea. What's your take on it?
No, shrinking of business I don't agree with at all. I know Jaggi had mentioned it, but it serves absolutely no purpose, because what is shrinking is supposed to do? We've seen the case of, the RBI has put 11 banks currently under PCA. Now, 2 of these banks have been under PCA for the past 2 years, and there's been no improvement in their position whatsoever. So, shrinking is not a solution at all. In fact, it's not as if just because a bank is in trouble today, it will continue to remain in trouble. In the early 90s, we had the case of the Indian Bank, whose net worth was completely eroded. The bank was almost a complete write-off. But then we brought in a new chairperson. In fact, I must say it was a woman, Ranjana Kumar, who set the bank back on its feet within 3 years. So it is not as if just because a bank is in trouble today, it will necessarily continue to be in trouble forever. Provided you have the right support, provided you have the right people at the helm, it can be turned around. So shrinking is not an answer. And another point which perhaps Pradeep didn't mention is that most of our banks, even though they are nationalized banks, they have their own regional concentrations, and a large number of these banks which are today under PCA tend to be in the eastern part of the country. Now, if you were to shrink them, what happens to access to credit? What happens to the access to banking facilities? So I think shrinking is not an option at all. You need to ensure that you put public sector banks permanently on an even keel by ensuring that they are able to function completely efficiently at arm's length distance from the government. Today, even though there might not be any interference in loan decisions, as Mr. Goyal pointed out, the problem is that you ask public sector banks to do everything, starting from election duty to verifying Aadhaar to opening Jan Dhan accounts. So you mix up a whole host of objectives, and that is where the problem really lies. You don't allow them to function as banks. So you have to make up your mind, what are they, fish or fowl? They have to be one of the two.
Okay, Jaggi, I'm going to let you respond to it. This is a fascinating debate. Good to hear this intellectual disagreement, so to say. But before that, let's get in a word from Hemendra Hazari as well. I want to know which side of the debate is he on. Are you in favor of shrinking? My sense is probably not. You're going to go with Maithili. But just to add to Jaggi's argument, even today, the finance minister emphatically stated that the government will continue to support all 21 PSBs. That and he said that they are doing this social, they're here for economic and social development of this country, and we'll do whatever it takes to support all 21 state-owned banks. That obviously means it will continue to capitalize loss-making, inefficient state-owned banks with taxpayers' money. So, is that the right strategy? Do we have any other choice? Hemendra Hazari.
I'm a keen advocate of state-owned banks. I'm a keen advocate of increasing the role of the state in the economy. And that is because really when we are in an economic slowdown mode, I really don't see any recovery happening. The private sector, as is its nature, and very rightly so, will not take any risk. Therefore, the only entity when in such kind of an economic slowdown which can play a counter-cyclical role is the state. And therefore, it is imperative that the state investments in its entities, in its own expenditure must expand if the economy is to grow. Because if the state also starts contracting its commitments to the economy, contracts the fiscal deficit, the private sector is not going to take up that cause, is not going to take up the slack. So you are going to go into a very spiral which is just going to be heading downwards. And therefore, it is extremely important, especially when the slowdown that we are having, is that you have to recapitalize very strongly the state-owned banks. And there are issues of management in them, no doubt, but therefore, which can be solved. You have to take a restructuring, you have to retrain them, but all this effort is required. And therefore, in my opinion, if you contract the state banking, you are going to go into a situation where the private sector banks are not going to take it up. The private sector banks, they only look at profitable avenues. India is not a high per capita income country. When it comes to the low incomes, the private sector either ignore the market or they exploit them. We have seen this in the massive mis-selling of insurance that is going on in hand in glove with the banking system. Therefore, it is extremely important that the state plays a very vital and increasing role in the economy.
Okay, Jaggi, you've got two disagreements on the table. Maithili believes shrinking of balance, balance sheet is not a good thing. Hemendra Hazare is saying the state must play a very important, crucial and a big role in the economy. Let me have you counter them.
Yeah. Two things. When I say shrink, I don't mean that in absolute terms what you have today must shrink to something smaller. What happens is that the private sector will grow. If you remember a few months back, Uday Kotak said that private sector banks will take up 50% of the business. So that automatically means that the public sector will shrink to 50%. The point is the shrinking needs to be orderly. Second thing, the point about state playing a role in it. There are two ways state can play a role. State can either enable, it can also subsidize. So point less like take an example from another sector. In aviation, you want somebody to go to say far off places. So you have the UDAN system where you're going to offer a subsidy. That's what you're going to do. So like you don't have to do it all yourself. You can say, okay, for financial inclusion, I am willing to give you a state subsidy of X amount. Then even an HDFC bank will go and bring all the financial inclusion guys. I mean, you'll bring in all the poor. And today you have various kinds of banks that are actually eating into the space of the public sector banks. You have payment banks, you have small banks, and soon you will have all kinds of things. These public sector banks are too slow to be able to do it. I think you are just going to have a huge bloating taxpayer bill. You are going to have 50 Air Indias coming out of multiple sectors, 10 in the banking sector itself. And is that the way you are going to run this thing? I think the state has a role, but it does not actually have to run the bank. I am saying you have to enable banking. That is quite different from saying that the state must run 80% of the banking system. It does not work that way.
Lateef Chaudhary, I have to let you respond to that. 10 Air Indias could emerge out of the PSU banking space once Jaggi. Your comments on that, and also the fact is that for how long will we keep recapitalizing these PSU banks with taxpayer money? When the 2 lakh crore recapitalization happened last year, everyone thought this is it, and still it's not enough. Go ahead, sir.
That's right. So this is an utopia, that banks will be on their own and everything would be honky-dory. That can happen in Alice in Wonderland. That doesn't happen in real life. You take the developed economy like UK. Just last week, the government of UK has pushed in $10 billion, which is how much? 65,000 crores into Royal Bank of Scotland without taking any management control, and they are not yet sure whether this is the end of the tunnel, and they don't know how much will go in. So in this kind of a situation, amount of capitalization possibly is something that is uncertain, but that is necessary. And I think this Air India example is absolutely a bad example. If you look at Air India, how much income tax they have paid from 2001 to 2018, possibly zero. And how much income tax have the nationalized banks paid? I think possibly 40,000 crores income tax, and then they have developed the capital also. And if you look at the market cap of these banks, I think it's a significant amount. So I think these are two incomparable things and should not be taken into this. And banks are very different from other entities. Now, for example, you can shut down, even in UK, you can shut down a road, you can shut down a railways, you can shut down a coal mine, you can shut down. But the moment you shut down banks, there is panic that spreads, and even countries which have been stressed like Greece or Cyprus, they had to cut into everything, social services, pensions, but they couldn't afford not to capitalize the banks. Because if you don't capitalize the banks, then the confidence goes and capital moves elsewhere, either to some, not dysfunctional NBFCs or in all kinds of speculative assets. And best example I can give you of Russia. 90 to 95, when Russia was in a similar situation, the government refused to capitalize the banks. And today what happens, the biggest or the bank of some size, is one S-bar bank, which is also owned by the government. And today, generally Russians, if they get 100 rubles, their first objective is to ship it out to Europe or somewhere, but out of Russia. But if we want that,
right,
it can happen.
Right.
But even in Korea, this kind of thing, and the Southeast Asia, this bill has to be taken up.
Right.
And one thing that RBI has been totally failing. If you look at the top economies, just one point, that US, EU,
right,
UK, Japan, the central banks have done a huge amount of QE, quantitative easing. And what has RBI done here? Quantitative shrinking. So I think RBI also has to be sensitized that in this kind of situation, you have to expand your balance sheet and bring in quantitative easing.
Okay. So the word from Mr. Pradeep Chaudhary is that if you do not recapitalize, you run the risk of capital fleeing from your country to not just the country but economy at large, to NBFCs, which in any case have balance sheet troubles. But Professor Ramohan, the other proposal that is under consideration is of an oversight committee of retired judges, vigilance experts and former regulators to help in faster resolution of stressed assets. Now, we've heard these solutions 3 years back. Is it all on account of a new interim finance minister? Because the decision eventually will have to be taken by commercial banks. No retired judge or no vigilance commissioner can take these decisions. These are perhaps good for semantics, good for optics, but the decision have to be taken by the men in charge of banks. Is this going to serve a purpose at all? Because we've heard about these solutions before. It hasn't helped.
Yeah, I entirely agree. I mean, the need of the hour is to empower the bank management and to empower the bank boards to do whatever is required. The answer is not to bring in some panel of judges or chief vigilance commissioners or whoever to supervise these stressed assets. I'm not arguing against some sort of mechanism for moving specific stressed assets of, say, sectors like power, bringing them under a certain umbrella, and so that nursing these assets until the power situation improves. So there is a case for doing that, but I think there is enough expertise within the banking system to do this. And while I am not averse to some judge or former central vigilance commissioner sitting on these committees, it would be most unwise to presume that there is lack of expertise within the banking system and that the solutions have to be provided by some so-called experts or independent people from outside. Again, I think that's a terrible idea.
A quick point you wanted to make, Hemendra Sir. I need to take a short break. Quick point from you, Hemendra Sir.
Good resolution to come in. The concentration of NPAs is with a very few large big corporates. Right. Now, you have to unleash all your enforcement agencies, the Central Bureau of Investigation, the Enforcement Directorate, on all these corporates. And the moment you put a couple of the prominent, not some small corporate chieftain, but some prominent corporate chieftain, let him spend a couple of nights at the Arthur Road jail or the Tihar jail, and believe me, you'll have a line of these corporates coming in to pay their dues to the banking system. You got to have this political will to push this through. But unfortunately, I don't see that happening at all. And therefore, there's not going to be much resolution.
It was a day when Finance Minister Piyush Goyal also broke his silence on the ICICI Bank controversy. And to quote him, he says ICICI is a good bank with robust processes and he doesn't believe that ICICI Bank stakeholders have anything to be worried about. Jaggi, what do you make of that statement? This is the first that's coming in from one of the highest officers in the government.
See, I think it is basically a statement intended to calm the markets, not to say that, the last thing you want is a finance minister or somebody even is officiating as a finance minister, to come and say, yes, there are serious problems, we will look into it, and that kind of statement will actually scare your investors and other things, and also make depositors and others wonder whether there's something they have to do with their money. Don't forget, ICICI Bank has faced 2 previous scares. In the last time, I remember even companies like Infosys had withdrawn some 2,000, 3,000 crores of deposits and shifted them to State Bank of India. So my point is, this is more meant to be a calming thing, not meant to be a clean chit to Chanda Kochar or whatever conflict of interest was there. They're saying that overall the bank is safe. What is going to happen on what about her thing, that will be done by different agencies. His business is about calming the markets and investors and depositors.
Point up. Hemendra Azari, do you agree with Jaggi? At the end of the day, it's about calming the market. It is one of India's largest private banks, and you don't want to sort of have a, want to create panic in the market and have a run on the bank. So to that extent, it was not it should not be read as a clean chit, but as one saying, things are under control. Hemendra Azari.
I think given the circumstances, he has done the right thing by, trying to calm the market. But firstly, there is no panic as of the moment on ICICI Bank depositors. But let us examine the statement of what he has said. Now, if there were robust processes, let us examine how would a bank have responded. When a charge is made against the CEO, you get an external agency. A robust process would have meant you get an external agency to look into it. During that process, the CEO steps down or goes on leave. Instead, what do we have in a bank with supposedly robust processes? We have an internal investigation is done where most of the independent directors know nothing about, only the chairman seems to know. The chairman then exonerates totally the CEO, makes a public statement of it, and now we are told there's a second whistleblower report which comes out, and now we are told that there may be, an external agency. So this is a bank, I'm sorry to say, it does not seem to have any robust systems when it comes into investigating such a very serious allegation against its CEO. I think this is one of the most shameful episodes I've noticed in Indian banking sector. And it is a shame. As a banking analyst, I'm ashamed that a CEO of such a prominent bank refuses to step down when there are such serious allegations against the person.
Right. Okay, let me just take this to Maithili. And Maithili, Mr. Piyush Goyal, as India's finance minister, says ICICI is a good bank, stakeholders have nothing to be worried about. It has robust processes. Why does he not tell the government representatives, both from the Ministry of Finance, the Joint Secretary there, and the LIC representative, to then make a case, to then let their voices be heard, to then test those robust processes? I mean, why does the government, when it comes to walking the talk or, instead of preaching, practicing, shy away from the controversy? If those processes are robust, shouldn't the government be putting it to test, and shouldn't Mr. Goyal be telling his officers to do just that?
Absolutely, it defies understanding, because though it is true there is no reason to fear the health of ICICI Bank, there's certainly to say that the processes were robust was completely inaccurate. I would agree entirely here with Hemendra that its processes were far from robust, not only in terms of non-disclosure supposedly of the conflict of interest, but also in the subsequent action taken by the board of the bank. But if Mr. Goyal believes that the processes were robust, I agree with you entirely. There is no reason why both the LIC nominee director on the board as well as the government's own nominee director doesn't attend the meetings. In fact, every time the government nominee director has shied away from attending, and this is a complete abdication of all responsibilities. If you are a member on the board, you attend the meetings and take a view one way or the other. You cannot just say that I do not want to attend the meetings. This is ridiculous, and this is the same government which in the case of Usha Subramaniam took a very strong action, but in the case of a private sector bank, even its nominee director does not attend the board meetings, whereas in the case of the public sector banks, the government has clearly told its nominee directors that you must act firm. So I find it very difficult to understand why is the government not fulfilling its role. If you have a nominee director on the board, then the least you can do is attend the meeting and take a call one way or the other. You cannot sit on the fence and just not attend the meetings at all.
Mr. Chaudhary, do you agree with Maithili that there are double standards here? In the case of a public sector bank, there are one set of standards, but if it's a private sector bank, there are another set of standards, both by the government and by the RBI, which hasn't intervened yet.
I think it is more in the domain of RBI. government in public sector banks is the major shareholder, so they can have a say in the management or appointment of key managerial personnel or whatever. But it is RBI which is surprisingly gone into hiding, and totally, you know, they have taken a vow of silence. This is unprecedented anywhere. This is as if something, this does not affect them. This is something that is happening on another planet. They don't even have a view. And on this point, even ICICI Bank, the Reserve Bank of India, can come and intervene, because they can do an inspection at any time. So whether the processes are robust or adequate, I think Reserve Bank of India has the best inside view and has the enough, you know, support in terms of personnel and people. Just one director attending a meeting in once in 2 months for 3 hours can't unravel all this, or even can't form an opinion on this. So it is very surprising why RBI has taken a view that it has nothing to do with me. In fact, I am very happy that SEBI, which has a relatively different fiduciary oversight, has been much more active. They have asked for conflicts of interest and they have asked for some disclosure, but RBI has done none of that. So in all crisis situations, I don't know what has happened to RBI. They think that the best thing is to go into hiding and be silent. So as they say, a dumb person has no enemies. So maybe RBI is following that policy.
Well, that's well put. Clearly, you can't sort of brush these problems under the carpet. But Professor Ramon, I'll let you have the last word, and sort of let's step back and look at the big picture. What's evident is that there is a credibility crisis both in public sector banks and in private sector banks. The problems are different and the problems are deep in some sense. So the most important thing is, do you believe that the government will invest its political capital in resolving these issues, in getting to the bottom of these problems and finding simple but effective solutions? 10 months to elections, do you believe they'll invest its political capital in solving this, or do you believe come 2019 we're going to be faced with the same problem?
Well, I hope they do what is required, at least in respect of the public sector banks. Because I think what needs to be done has been clear enough almost from day one, and to me it's a big mystery why 3 or 4 years have been wasted in coming to grips with the essential issues, the issue of NPA resolution, the issue of bank recapitalization, the top appointments, the strengthening of boards. Why these issues have been allowed to hang fire for 4 years is a big mystery to me. But you also asked me whether the government will invest enough capital to take care of the private banks, and there I think the finance minister has given a clear signal saying that it is for the RBI to take a decision on this matter. And there I would share Mr. Chowdhury's sentiments on this. What happens if the RBI is not seen to be decisive enough? Then what is the government's position, especially given the fact that the government has a nominee sitting on the board of ICICI Bank? Do you not have some responsibility to make sure that matters are set right? It's fine that in principle that the regulator has the primary responsibility to do that, but given the puzzling lack of inaction on the part of the regulator, where does the government stand? I think this question needs to be answered.
Puzzling lack of inaction as far as the regulator is concerned in the case of the ICICI Bank, and a general lack of inaction in terms of solving the NPA problems, even though it is an acute crisis and there are no easy solutions to tackle the mountain of bad debt that's there in the banking system. A lot needs to be done to restore credibility of the Indian banking system. Hopefully, we'll start taking those steps from here on and not wait for a new government to come and fix the mess. Can't thank this wonderful panel enough for joining us on this edition of the India Development Debate.
Completely timed out on this edition of the show. Thanks very much for being with us. Up next is Top 10 at 10.